Yesterday we had a breakout at the end of the day. There was a spike in a channel. And today coming in, the market had already broken out. So the question was whether the breakout would fail or whether it would fail and then result in a breakout pullback long. I was not interested in buying a trend from the first bar up here because this is so overdone. And we're still at the area of the double top on the daily chart. I would consider a trend from the first bar bear, but not when the bar looks like this. If it was a 6-tick bear bar up here where there's room to the close and to the moving average, I would then consider shorting that. But when you have an exceptionally large bar like this, big up, big down, usually the market is going to go sideways. So I would not be looking for a trend from the first bar bear here. However, when you see a bar like this, I thought that the market was probably going to come up somewhere in the middle of the bar, maybe 48.5, and then turn down. What about buying this? It's a test of the close. I don't like the double dojis, and also I'm looking for a short. I'm looking for the market to hit around 48.5, somewhere in the middle of this bar, and then go sideways to down. It's an okay trade for a scalp. Most reversals in the first hour or so work. Bounce. Outside up bar, a 5-bar micro wedge. 1, 2, 3, 4, 5. I think chances are the market's going to try to have at least a couple pushes up. I think it's okay, to buy early on this as soon as you see it. It's also a double bottom at the start of the channel. I don't think you have to wait for the close of the bar. If you did wait, you could either buy outside up or you could buy above the high of the bull bar. But because of all this overlap, if you buy, the stop has to be below the low. The market is clearly in a trading range. Because this is a climactic type pattern, the trending highs and lows, it works like a channel. I think it's a mistake to short the first breakout of the channel, even though the market is at the top of a trading range. Good looking reversal bar. Then the market had a couple small inside bars. Okay, is this a good flag for a breakout to the upside? This is not good-looking price action for the bulls. This is, lots of overlapping bars, small bodies, a lot of bear bars in there. I'm not going to buy this. If it goes up here and reverses, I could look to short it for a final flag. And look what happened. Just a 1 or a 2-tick breakout and a reversal. That, to me, means not many bulls bought this. And final flags work because traders get trapped. This does not look like anyone got trapped. It doesn't look like someone got in, a whole bunch of traders got in there and said, oh my gosh, I did the wrong thing. I got to get out quickly. Nobody got in quickly. There was no emotion pushing it up, so there weren't a lot of excited bulls. And because there were not a lot of excited bulls, there weren't a lot of panicked bulls trying to dump. So this is not a good trap. Maybe it'll set up a high to long or a bigger final flag. Okay, here's a second entry on the final flag if it's going to work. It's holding at yesterday's close, double top at 46, second entry short. Again, no one is trapped, and we're in that time of the day when traders tend to get trapped. And that always makes me nervous, because if I don't see anybody trapped and I take a position, I assume that I'm going to get trapped. And so I'm always very quick to exit in situations like this. I think that's an okay short, good-looking entry bar, but the very next bar it reversed up and trapped the bulls. Excuse me, trapped the bears. Now, what about buying above the double top? There's a chance the market could break out to the upside and go up to these targets. I think it's okay. but I think it's really risky because we're at the top of a trading range, and we're in that time of the day when the market tends not to break out and instead tends to reverse and trap traders. So if traders do buy this breakout, they got to be ready to reverse or at least exit. Okay, that's not a good breakout bar, and that's an even worse looking bar for the bulls. The bears got trapped here. Now the bulls are trapped here. That's usually a good setup. You know, that's the kind of thing that I look for between 10:30 and 11:30. You know, I want to see at least one side trapped, and preferably I want to see both sides trapped. And that's what we had here. You clearly had trapped bears here, and you had trapped bulls here who bought thinking, there are trapped bears, and they'll have to cover their shorts and drive the market up. Decent looking signal bar on the short. I made a mistake and exited, and ended up having to chase the market down. But the correct thing to do is just hold on to your short, with your stop above your entry bar. And even after this little bar, I'd still keep my stop above the entry bar because you're only risking one more tick, and it's possible the market could, tick above this little doji bar before going down. Okay, the bears are still in. And this is a second entry long, so what about buying above this? It could work. To me, I'm just nervous that the market is going sideways, and the market triggered and then failed. There's something important here. This is a low 2 short. What's important here is whenever you see a trade and there are 2 long entries on the trade, and the second one failed, it's usually a good setup for a reversal, because usually you will have trapped longs. The setup, it's the bottom of a smaller trading range, arguably some kind of wedge pattern. There was a long here, which is not great, and then it gave a second attempt to go long. You have to exit on the low side. That's just a rule. Whenever the market is going down and you're buying, and the market forms a low 2, you have to exit, especially if it's a bear bar below the moving average. In fact, you should even think about going short. Going into Monday, don't forget, you can't ignore these 2 bars. All right, strong bear bar, strong bear bar, sideways price action. I think there's a pretty good chance that we're going to trade down on Monday, that this will act like a trend resumption bear. One leg down, sideways, second leg down. So I think that before the market takes out this high, it's going to have a second leg down, somewhere in this area. 60-minute chart doesn't look like it on the 60-minute chart, so I don't know. 5-minute chart looks like strong down, sideways, good shot for a second, another leg down. Weekly chart is just above the double top on the but the cash index on the daily, I believe, closed just a fraction of a cent below the double top. Let me go to the daily chart. Here's the E-mini. The market is clearly above the prior high, but on the cash index, today's close is below these closes, so it could not close to a new bear rally high. I don't know if that has any significance. To me, it doesn't mean all that much, but I do think it's interesting that the E-mini and the Globex both closed above the prior high, but the cash index closed below these closes. All right, I'm off. Hope everybody has a good weekend.